Jeremy Stretch. He's head of Forex strategy for the Canadian Imperial Bank of Commerce. Jeremy, great to have you in the studio so bright and early. What do you expect the Bank of England to do today?
Well, I think on balance, it's most likely that they will hold policy at this particular juncture. Clearly, there are ongoing headwinds, not just in the UK, but also coming in from the European crisis. But I think they'll probably say, well, yes, we want to keep our powder dry in terms of more QE at this stage. And of course, we also had the IMF suggesting that rates should be cut from already just half of 1%. So there is still a little bit of leeway in terms of rates. But I think probably the bank will say, we'll see how things develop over the next month or two.
Is that the right decision, though?
Well, if you're talking about more quantitative easing, i.e. effectively only buying more gilt-edged securities, i.e. government debt, then you could argue that the actual stimulatory effect on the economy is going to be relatively modest anyway. I think if we're going to have real impact, then you would need to see the bank take a more widespread approach in terms of what the assets they're going to purchase, and it seems as though the bank aren't keen to do that. So you could argue that the actual stimulatory basis is going to be relatively modest anyway.
But what is the data telling us? Is it telling us that the economy is weakening more? Plus, you have this deteriorating situation in Europe. Many do think that the Bank of England probably should do something sooner rather than later.
Well, I think there is a case to be made that the data is deteriorating. I think we will be watching the service sector PMI this morning very closely, because I think that's going to be a very key indicator. It's rather unfortunate that's now coming out on the same day as the Bank of England meeting, because I think that would really have changed the game somewhat. But looking at the manufacturing data that we saw at the back end of last week, that was exceptionally weak, or certainly a very sharp pullback. And I think if that's replicated in the service sector data, which of course is forward-looking, then I think the probability of QE or more stimulus coming sooner rather than later will be even higher.
And how does this all affect the pound?
Well, we've seen sterling really falling quite dramatically against the US dollar over the course of the last month or two, and I think there is still a risk that sterling does depreciate a little more against the US dollar. When you see sort of a range of maybe 150 to 160 in terms of sterling against the dollar, that's pretty much more or less fair value. I think we have the prospect of easing back towards the bottom of that 150, 160 range over the course of the next few weeks.
What needs to happen for sterling to see inflows because of the weakness in Europe, sort of safe haven inflows?
Well, I think we've probably already seen some of that already, so I think that's one of the reasons why sterling has held in comparatively well overall, despite the relative weakness of the data. And I think for those investors who want to stay within the European time zone but don't want to be in the euro, then the alternatives are relatively modest, because of course the Swiss franc is not part of the game, and of course if you want to be long of either the Swedish krona or the Norwegian currency, it's a very crowded trade. So I think sterling has gained by that basis, but I think it could well be the case that if we do see further negativity in Europe, then maybe we will see euro sterling under a little bit more pressure.
Now let's talk about Europe. Why on earth is that euro back towards 126? We haven't had any solution, have we? Did I miss something?
I don't think we've had any solution at all. I think we've had some talk behind the scenes of a solution. I think people are hoping that a solution will be found. But I think in reality what we've seen is a degree of short covering, because clearly investors had become very bearish on the euro outlook, quite rationally I think in most cases. But we've seen some of those shorts starting to be squeezed over the course of the last couple of sessions, and I think that's caused the tide just to rise a little bit. I think probably in reality it just provides some slightly better levels to get short of the euro again, because I think the headwinds for this month are still exceptionally high. The risk factors, of course, we haven't been discussing the Greek election for the last couple of days, but that hasn't gone away. So we've been talking about the Spanish banks and any potential resolution on the banking side. But I think we're still some way from any resolution on that score. And those that have been raising their hopes that the summit at June 28th, 29th will see some kind of substantive measures, grand plans, whatever you want to call them. If we go into those that sort of meeting with very high expectations, then generally we found those expectations underwhelmed.
We were just talking about this. If people pull money out of the dollar, given that they expect the Fed to act first, where is that money going? We had some, you said, euro short covering, but where else can it go?
Well, that's right. I mean, the alternatives in the FX space are very few and far between, because, of course, if you decide that you don't want to be in the safe haven of the dollar, if you think that there's going to be more QE coming down the track from the US, although I think probably markets are getting ahead of themselves in that particular score. Obviously, the Japanese are very mindful of the strength of the yen, and that was one of the byproducts of the teleconference earlier in the week, that the Japanese managed to get their voices heard quite loudly. So there aren't we're in an environment where it is very uncertain. We're even seeing the Australian dollar making a little bit of a rally after the unemployment data. But again,
a lot of people saying sell that Australian dollar because that's overvalued.
Exactly.
As well.
I think there are a number of issues there. So I think we're seeing some sort of recycling of funds, pre-positioning, if you like, perhaps anticipating something more aggressive from the Fed.
We had Tony Crescenzi actually talking about why the euro has gained and why markets are rallying, and he was saying it's not the ECB. Indeed, we didn't get anything from the ECB except a pledge to be ready to act. He said it might be that there is some movement on the front of what to do with Spanish banks. Do you believe that things are gathering momentum, possible solutions in Europe?
Well, I think, as ever with all things European, any solution, even however small, only actually comes at the edge of a crisis. So I think, in essence, we have to get to the edge of that crisis before we see some solution. Are we actually there yet? I'm not necessarily convinced. I think still the Germans are very reluctant to be seen to be underwriting anything too aggressive as regarding both the Spanish banking system, but in terms of the banking regulation in general.
Given that most of the voters in most of these countries are going to be reluctant to give up sovereignty, even those that need money, is there something in between where we are now and full fiscal financial integration? Perhaps a banking union, perhaps this European redemption fund where you pool all of the debt and pay it off over the course of, say, 50 years. That's not debt sharing. It's a type of debt sharing, but it's not mutualization of debt.
Exactly, and I think that's probably where we will end up. We won't get an explicit Eurobond, we'll get something that's more implicit. So we have some kind of pooling of some of the excessive debts, but it isn't going to be the case that Germany is going to be asked or will be agreeing to underwriting the whole of the debts of the Eurozone effectively. So I think we will probably find that we'll end up in some kind of halfway house. Whether that's enough for the market, whether that's enough to solve the crisis, I think is a different matter. And I think we still have to have a number of twists and turns and pitfalls before we get there. And of course, not least of which is we still, as I say, we haven't really mentioned the topic of Greece, because of course that could crystallise into the crisis mentality relatively quickly once again.
Right, June the 17th. It's not far away indeed. Jeremy Strutch, head of foreign exchange strategy for the Canadian Imperial Bank of Commerce. Thanks very much for coming in this morning.